when I started getting the dancing going.
Welcome to the Deal Champs podcast. The Master of Hair is out today.
You go.
He got stuck in like LA, then he got stuck in Orlando. I don't know where he is now. Hopefully,
He just didn't have enough hair product for today. That's what it was.
But that's probably what it was. He wasn't going to go to Orlando.
Didn't have enough hair product.
Not enough hair product. He's like, bro, I can't go in front of a bunch of other business owners with not the best hair. I don't think that's in his personality. So that's probably what happened.
The guy we got filling in today, that dude got some nice hair.
Right, bro? You got some good hair going.
Mm-hmm.
I got my haircut today just in time.
Mm-hmm. Just
new dad, new hair, full beard. Right. I'm loving it, bro.
That's right.
Hey, that's a good looking dad bod right there.
Thank you, fellas.
Oh yeah. How many kids are you going for, Tommy? I know Dean's going for 9.
I'm going for 5, but my wife wants 3, so maybe we'll do just the classic meet in the middle at 4. We'll see.
Okay. I want 5. Kalani wants 3.
Okay.
Whoa, Dean wants 12.
I wanted 3, but I'm already past that, so I can't even really say much anymore.
Right. I don't see you stopping anytime soon. Even if you get snipped, it's not going to end. You got swimmers.
I told you, get the chainsaw. Let's get a chastity belt. I need something. I need help here because these guys are Olympic swimmers over here. My mom was literally training for the Olympics, and then she became allergic to chlorine and the alternative bromine, and had to literally quit swimming.
Really?
So it's in the blood, dude.
That's wild.
That's wild. Well, it's good. It's good to hear. Tommy Harr on. Tommy, thank you so much for coming on, bro.
Yeah, appreciate it, fellas. Holding it down for the East Coast over here. I know you guys are all the way out west, so gotta hold it down over here.
So do the Ohioans call each other call themselves East Coasters?
Not really. We'd be more Midwest, so maybe I'm holding it down for the Midwest people.
Man, you were just trying to bring a whole nother side of the country in with you on that one,
right? Ohio is legitimately in the middle of the country, isn't it?
No, it's more. It's more this. It's I don't know. I think it's east.
Bro, it's at the very top. Bro, how many deals do you have come across your desk that you just can't do anything with? Like they'd give it to you and you just like don't want anything to do with it.
I'm only in Columbus, so I don't do anything in Cleveland or Toledo or anything like that. So not that often. Now, a few years ago, we branched our marketing out to Toledo. We thought we were going to do some good deals there. Ended up buying a house for $5,000, and I lost $2,000 on that on a buying list. So,
buying a house for $5,000, you lost too?
Lost $2,000 on it. I think we sold it for 9. We sold it for 9. I had to pay realtors and fees and all that shit. So yeah, I lost $2,000 on a 5,000 standing house. I couldn't believe it.
It sounds about right, bro.
Can you imagine buying a house for $5,000? That won't even get you a tough shed in California. You know what I mean?
Hey man, that's how it goes.
We have one right now in Muncie, Indiana, to where I'm debating whether or not we even want to lock it up. He's like, bro, it's just give me $5,000. I bought it for $5,000. Give me $5,000 and I'll walk away. And I'm looking in the neighborhood and I'm like, could we get like 7? Could we sell this for $2,000? Like, is it even possible?
Bro, that's the hard thing. I mean, are you doing PPC or are you doing the paper lead stuff? I feel like that's
we do. So we have a partnership with Lead Zolo to where we get it. I mean, if I look at our contracts right now, they're all over the place. We have one in Philly, one in Cleveland, one in Macon, Georgia, Little Rock, Birmingham, Chicago, Austin, Belleville, Clarksburg, West Virginia, Bangor, Maine, National Hot Springs, Arkansas, Bellevue, Illinois again, Iowa City, Muncie, Indiana, Humble, Texas, and Hudson, New York. So like we got them like all over the place.
So you're just relying on that investor lift to hopefully sell all these things, and maybe an investor base now.
No, bro, this is all novation. Like,
shit. Okay.
This is you have to. It's investor lift is like an aspect of it, but you got to get it essentially everywhere because we'll get some like random rural stuff to where like you could investor lift your ass off and it's not going to change for you, bro.
Right.
You just got to put it up on the market. We looked at investor base.
Don't even want it.
Yeah, and it wasn't with our business model. Investor base doesn't necessarily fit what we do.
Sure.
What's the story with investor base? Because I just had funny enough, our special guest, shout out to our next meetup, August 20th in Fresno, California. We've got Rafael Cortez coming to speak, which is going to be incredible.
Awesome.
He had just connected me with, I believe, the owner of Investor Base and said, hey, you guys should connect. What's
Daniel?
the story on it?
Did he connect you with Daniel?
I think so.
Yeah. So
he's a good dude.
Good dude. Young dude, crushing it there. I think they're in Charlotte, or not Charlotte, Charleston rather. And basically, I mean, it's good for companies that are like us, I think. So we're doing a lot of stuff in our market and only a few markets. And basically it's a sniping tool. So instead of like doing a 5-step process to finding out who flipped a house, then going and skip tracing it backwards and trying to figure out who the agent is or the owner before, it'll do all that work for you, skip trace it for you up to like 3 to 5 years in the past. And you can just call those people. So it's great for building buyers list and hopefully selling deals in real time. We've been using it pretty actively and it's been pretty solid.
That's really good.
Yeah, it's cool.
It's good for like, if you're in a major metro, I think it makes sense.
Absolutely.
Like if you're in a major metro and you're not going hard nationwide,
yeah,
because like as soon as we had him pull up a market that wasn't necessarily like a big market and they didn't really have any data and there was like a property we had to where that was like our issue.
Yeah.
But at the same time, I feel like at a point now, it's just going to be another tool in your tool belt on top of Investor Lift, on top of putting it on the market. And then you just have, okay, this is just another part of our disposition process. Because I think it's really inexpensive too. So like you can add it and you're not really going to notice it.
Yeah.
As far as like the cost.
It's either $250 or $500 a month and skip tracing's included. So you can do as many as you want. So we've got a virtual assistant in there going basically zip code to zip code. And it'll like best match the best buyers. And we're just cold calling them, getting them on our buyers list. So then when we have stuff, we're just personally touching them. Yeah.
I'm going to be doing that.
Yeah. It's pretty damn cool. You should definitely hop on a call with Daniel.
Nice.
Okay. Let's do some quick intros. We've missed our intros. My name is Stratton Brown, aka Strat Daddy. I'm on a journey of 0 to $1 million net in 6 months, wholesaling houses. I've scaled 2 different companies to 7 figures. And our goal here is to give you as much info that you need to grow your real estate investing business, live a better life, all that good stuff. We handle so many different topics that I don't think really anybody in the space really talks about, which is good for you guys. We have the Captain America, Mr. Lululemon, Dean Rogers.
Are you growing that stash in finally? Because it looks like it's coming through finally. You don't look like a child anymore.
Hey, bro, it comes in a lot faster now. It comes in like once a week.
Yeah.
But I still can't connect. I'm trying to be like Tommy with a beard, and I got to go get some Rogaine.
Tommy's got a great beard.
Thank you.
When I saw him in person, I was like, I like this guy. So, guys, you're the co-host here, Dean Rogers. My career, I started in the NFL. Then I transitioned to corporate, then into real estate. Been investing in real estate for a little over a decade now, on my 11th year. We've done 650 plus deals. We have a 8-figure rental portfolio. We're hitting new breakthroughs, man. We're on our 2nd month in a row with 20 plus deals. We hit our 3rd week in a row of 5+ deals a week and having some consistency on that. Strat's given me some props for my number of leads per deals. Last week was 27 leads, 18 offers, and 5 deals.
Really
I'll
that's
take that every
bananas.
day.
Really,
bro,
really
that's
pretty
crazy good.
That's really
good. And coaching students how to get started in real estate with wholesaling. So you guys can always connect with me at deanrogers.com.
Yeah, are you showing up to these appointments with your shirt off or something? Is that how you're getting such good conversion, or what's going on there?
The great thing is you know, and I talk about this, I've been virtual since day one. So I have literally been inside of a dozen to maybe 15 houses of the 650 that we've done. I definitely haven't seen all and most of our rentals that we own. I just look at pictures and I have a Google Maps and I know where it's at on the map. If you take me through the town where I'm buying this stuff, even though it's where I grew up, I'm pretty unfamiliar with it. I got to use Google Maps to go around town, but that's the way it was set up from day one. Out of like necessity. And then I've just kept it that way since, and have a team around me, and it's just worked out really well.
That's insane. That's insane. I would say mine's the exact opposite. I've probably walked thousands of houses. So I graduated college, played college soccer. Wasn't a professional athlete like you, but came back and started working with my dad. So my dad is a home inspector. He's been doing that for 23 years. So started building his business, figured out how to kind of market and do things on my own. So learned very quickly that you can work as hard as you want all day, every day, but it's not going to retire your family, your kids, all that stuff. And I fell in love with real estate investing pretty fast. Now I'm 29 years old, about to turn 30 here, end of this week. Own about $15 million worth of real estate. I've done a little over 400 deals in the past 5-6 years. We've got a wholesaling company, flipping company, rental company, and an education platform as well. We have about 250 people we help across the country learn to wholesale and flip. So real side of real estate. If you follow me on Instagram, I like to share the stuff that people don't often share: losing money, trees falling into houses, some of the things that happen if you're an actual real estate investor that actually happen, but nobody likes to share. So that's some of the stuff that I like to open up people's eyes to.
I love it, bro. Where'd you play college soccer at?
University of Dayton.
Okay. I've heard of Dayton.
Yes, sir.
I think playing soccer in college would be super fun.
You need a 4-year degree to be a home inspector now?
No, I got a finance degree and an entrepreneurship double major, whatever the hell that means. I'm one of 5 kids, and I always wanted to work with my dad. I'm the oldest boy. So, and also I grew up in he had a property preservation business growing up. So for those of you that are maybe on here that know, when the REO time was happening, banks were foreclosing on everything. My dad had a business where we'd trash houses out, board them up, mow the lawns. So I grew up in my early teens into my college career, helping him out in that business.
Oh, that's dope. So you've been like in the game for a little bit, at least knowing everything around it.
Yeah. I'm never really like the money side, but I knew how to. My dad has been getting his hands dirty in real estate for a long time. Just had to kind of change that mindset, learn some things, and now my family's kind of taken that route with me.
So were you ever? I know this is an interview, but like, were you ever scared of flips just because you knew so much about like construction?
Yeah. I mean, I knew a lot about construction, but especially learning to be a home inspector, but I didn't know a lot about like finish quality and how to do trim and doors and shit like that. So I had to learn that from the ground up. I mean, I lost $100,000 on my first flip with my uncle. So I just knew it couldn't.
I lost $100,000 on my first flips too, dude. Got wrecked.
Yeah. So I mean, once you hit the lowest of the low, it's just like, okay, I can't get any fucking worse than this. You know,
that was a low.
Yeah.
What did your uncle say, bro?
We weren't really on speaking terms for a while there.
Shoot.
It was not great.
Brutal.
I mean, I was 23 years old. Coming out of college, Division I athlete, I thought my shit didn't stink. I thought things were going to be easy, and the real world smacked me in the face pretty fast.
Yeah, you got blindsided.
That's right.
Oh my God. I'm guessing you got him right eventually?
Yeah, we've worked things out.
Bro, $100,000. I'd be like, what the fuck are you doing? What did you just con me into, bro? Did you just walk away with my $100,000?
It was not fun. It was not a good thing.
Was it over rehabbed, or did you just buy it wrong?
Everything. So I think if I bought that house now, so the problem is we bought it in an A-class downtown area, very, very nice downtown, 4,000 square foot house, 6 bedrooms, 5 bathrooms, 100 years old. We over rehabbed it. We over budgeted. We under budgeted the time, and it's on a main road. So there's a stoplight right in front of it. And I didn't know this town was very pretentious. There's a South Bexley, Central Bexley, and North Bexley. And whenever I told somebody we're in North, they'd be like, "Ooh, I don't know about that." I'd be like, "Ooh, that's bad." And I didn't know that at the time. And I didn't know that double line roads were bad. And like the pocket behind us, houses were selling for 800, 900, 1 million plus. Mine ended up selling for low 7s because of all those things.
Yep. I think that's a good transition into one of our topics.
Story too.
What to do when you overpay for a house? What you should do when you overpay for a house? That was like actually one of our topics today, and I think it's a good transition point. I said light the house on fire. That has been the only time I've been bailed out, when me and Kyle overbought a house, because we bought it with like negative equity, sub 2. And we were going to have to bring, it was only like 30 to 40 grand on to the deal. but luckily we were going to make 70. Then we ended up making like 50. So it wasn't the end of the world. But if the house didn't burn down, we were going to have to bring a ton of money to the table to remedy the situation and just get it to the finish line.
That's not fun.
No.
Yeah. So I'll go first. I mean, dude, I've had deals go south. Not many, but the ones that I have, let's say let's say there's probably 7 deals I've lost money on. Okay. And the 2 big ones, one where I lost 100 grand and one where I lost 187 grand. They all came back on my shoulders. They were my fault. The first one was rushing into my first flips. All the things went wrong on the wrong side of the street, using the wrong comps.
Yep.
There's a 6-plex across the street that had a bunch of problems, people out front all the time. Contractor was bad. The next deal where I lost 187, it was basically a con man, a guy running a Ponzi scheme that I was blindsided by. And it was, look, one thing I've learned over time and maturity is taking ownership. It was my fault. I chose to do the deal. But on the other side of that deal was a guy who was a con man who gave me all these facts of the deal and said all these things were a certain way. And when I bought the deal, not having done my full due diligence and trusting the person, I got blindsided. And now I had this terrible mess to clean up. And it was a loser from the very get-go. So that was even harder. What I've learned in being in a situation, the other ones were just like, I bought too high, I bought too tight and went over budget and just lost 10,000 or 15 or 5 type of things like that. When you're doing volume flips, that's bound to happen. Now, the ones that went really bad, the lessons I learned, and I didn't do this on the first one, and that's why I lost so much. I didn't have enough urgency with taking care of the problem and cutting the loss sooner than later. I kept delaying the loss. I kept prolonging selling the property because I knew that loss was going to happen when it was sold. And we kept waiting and kicking the can down the road and focusing on trying to get more deals to pad the bank account to be ready for taking this hit. And it was when I was just getting started and really had no money to lose. So that was the lesson I learned there. And on the second time I lost money, again, I got blindsided. It was a loser from the get-go. I did take urgency. I could argue I could have taken more urgency, but the loss would have been greater and worse had I not. And that's the biggest thing. I think a lot of us, we want to tuck our tails in between our legs and pretend it's not happening, but it's only going to make the problem worse. And another good lesson I learned on the second big monster loss was to call other people to help you solve those problems. There's a lot of good people out there that have been through the problems that are willing to give you little tips and tricks. And I know that definitely helped me navigate some of the obstacles I had never dealt with before and get through that. And the advice I always give to everybody when sharing my losses and how painful it was is that make the extra phone calls before you get into the deal, right? Just make the extra phone call, make the extra text to the people that you look up to, you trust, ones that can give you some good guidance, give you some insights, because dude, I much rather take another step or two and look a little silly or ask the dumb question than just rush into the deal, hoping it will work out and get absolutely crushed.
Yeah. I feel like you were speaking to me for that whole thing. I mean, we did that same thing. And so, I mean, I was going to say, at least in the beginning, I mean, just take the losses as fast as you possibly can. If you know it's a loser, take it on the chin and just eat it. Because what we do as humans, I mean, we're so emotional in this deal. We know we're going to lose money and we're spending so much time, so much effort. We get to the end and we know we're about to sell it. And then we probably we're like, oh, I think we can sell it for a little bit more. We can maybe recoup a little bit of this loss.
Mm-hmm.
And then it sits on the market. And then you have private money, hard money. It's creeping up. It doesn't sell for what you told in your head it's going to sell for. So then you're either going to contract, God forbid you fall out. Now it looks like a problem property and you're creeping down. Your money's continuing to go up. And the next thing you know, your losses even get worse because you think you can band-aid it by going above what you thought you can go for. So if it's if you know it's still a good product, put it on the market for less than maybe ARV is, get that thing sold fast, maybe get a bidding war, and let the people feel like they got a winner on the buying side, because they're going to get this thing closed faster than pushing ARV to the very top. I mean, I just lost 40 grand on a house 3 months ago because of that same reason.
Mm-hmm.
The only other thing I've overpaid for 2 creative ones. One of our storage facilities, I willingly overpaid because I got 2% debt, but I underestimated the rehab cost.
Gotcha.
And so now we're going to end up throwing in 6 figures, maybe multiple 6 figures into extra rehab that I wasn't anticipating, of just issues to where, in all reality, all deals are going to take longer than you think, and they're always going to cost more than you think. And like me and my partner honestly violated that one rule. We're like, we don't need to paint this bitch. Why would we paint it? It's fine, bro. It's been a shit show for 20 years. Just paint it, right? But like stuff like that, where you take your lumps and then you gotta pay the piper somehow, and then you just have to recoup and then get back going.
Yeah, the problem is, I mean, once you get into these deals, you'll lie to yourself. Like, you want to get into a deal so bad, you'll lie and be like, oh, I don't have to do this. It'll sell, because it maybe is minute to you, but to the buyer, this is the biggest purchase of their life. It has to be right, especially if you're pushing it to the top value. So some of the things that you may not think is appropriate, it could bite you in the ass on the back end.
Yep.
Yeah.
Quick shout out to the CEO. Let's go. This is sick. Deal champs. And then we got Jack saying what's up to everybody. What's up, Jack? We do have a quick question. How do you guys usually come up with your offer on fire damage properties? Tommy, you want to take this one?
Yeah, so we've done we're selling another fire damage right now. Honestly, it's a lot easier. I mean, it depends on how bad the fire damage is, but as long as you can get, it's like building a new house. So if you're taking it down, the foundation's good. So you guys are in California, you don't have basements. So as long as the basement's good and the foundation's good, and the framing's all destroyed, you just have to look at it like a new build house and just run it that way. It's honestly easier if the house is more torched than it's not. But then when you're getting into the point where maybe it's a kitchen fire, then what you need to do is you need to make an offer that you think is going to stick, and get a structural engineer out there to let you know what you need to replace and what you don't, and make your offer hopefully contingent on running some numbers when it comes to that. And they're going to tell you exactly what you need to do. And you're going to have to pull permits. You're going to have to do all new electrical, plumbing, HVAC. So always budget for that stuff. The framing is going to be your only thing that you may have to figure out on the fly.
Let's go, baby. I got a quick shout out to the team right here. Got a deal under contract right now with $176,000 spread. Let's go, baby.
Let's go.
Bro, so are you hitting 2 500K months in a row? Do you know?
I don't get too excited. I don't run numbers and look at that kind of stuff and look at projections.
How fast are you assigning these bitches?
Almost instantly. I mean, I look at my prop. We had our team meeting today. Most of them are sold.
Wow.
Most of them are sold. One of them that's not sold that I got a quick shout out for. It's up in Soda Springs. We were like, where's Soda Springs? It's up right next door to Truckee, which is right next door to Tahoe. Truckee is where all the super mega rich people live, and not in Tahoe. And Soda Springs is its kissing cousin right next door. And dude, we got this spread on this deal. It's got like a $250,000 spread. We think we're going to make 100 to 150 on it. And I'm working with one of my students in Sacramento to try to get a buyer locked in
On an assignment.
On an assignment, yeah.
Bro, he has the biggest assignments I've ever seen in my life. Really? Honestly.
I'm telling you, Tommy, this is the secret right here, okay? Because I will tell everybody, I used to call myself Mr. Consistent. I just used to tell myself, I'm Mr. Consistent. I'm always hitting base hits. And I started to wonder what the hell was the matter with me. I was tired of getting $10,000, $15,000, $20,000 profit deals, to where I was like, okay, what about the 30? What about the 40? What about the 50? What about these other people that are getting $100,000?
Jason's what set it off, bro, is because Jason was buying shit so deep. Jason's the third of us who flips, and Jason gets houses so fucking cheap. It's ridiculous.
So I was starting to wonder what the heck was the matter with me, and realized that, okay, now at this time, I'm in the position of having a team, acquisitions, they're making calls. I'm like, but we're still doing average deals, right?
Yes.
And I realized we were just so focused on getting more deals. But what about getting better deals? How can we incentivize with better deals? The obvious is, they get more of a commission if they just get a better deal. Why wouldn't they want to get a better deal? Well, I had taken some kind of play out of the playbook from like the corporate days, and they used to have something called sales club. So if you hit your number, you get into sales club. And I was like, the terminology of a whale deal was kind of getting thrown around like, dude, that's a big ass deal, a whale deal. I was like, man, I want a whale deal. I was like, well, why don't I call it whale club? So I told my team, all right, I got a new thing. It's called whale club. If you guys bring a 6-figure net profit deal to the table, we've never done it before, then not only are you going to get your commission, which is going to be really big, but you're also going to get you and your family sent on vacation. Damn. And they were just like, holy shit, that's amazing. I'm going to get it first. No, I'm going to get it first. And it became this competition. Within 2 months, we got our first whale deal.
Damn.
Broke the seal. Now we knew it was possible. And a year and a half since doing that, we've already done 10 whale deals. Okay. And we've got new ones coming in the mix and new ones that are on the board that are to be whale deals. So it was literally just a matter of that. And dude, some of those are assignment deals, like straight up assignments right through escrow, 100+ K profits. We had a 90K one just close a week and a half ago. In the same month in July, we had a $65,000 one. Like 60, 70, 80, 90, 100 is not a crazy thing for us anymore. Now we're like, dude, we need to be like $250,000 is what we're telling ourselves, which is pretty hard to do when our average.
I'd say that one would be the tough one when our purchase is
200,000, or even less. So it's pretty hard to get into that, but yeah, man.
That's insane. What lead flow? I mean, what leads are those typically? Are those going to be inbounds, obviously?
Inbounds, all inbounds, and they're from everything. Everything across the board. And I know you and I were texting on the side about the different marketing strategy I do. There's not one that stands out. It's just which one came across. Like we had one come from our website and we're like, oh, but did you hear us from TV or from, the radio or a direct mail letter from us? Nope. I was just searching on the internet, and that one is going to close on the 20th of this month. And we're going to make $185,000 on that one.
Whew.
And that one was a quick, easy flip.
Wow.
Ridiculous. All right. Question number 2, after Dino's getting us hyped.
I'm hyped. I'm excited. Got this new one under contract. Let's go.
Well, okay. How is the stock market crash going to affect real estate? And I'll add in a caveat. Do you think rates are going to come down? We'll start with Tommy.
I think people are going to start, especially with Instagram and like people like us saying, hey, by the way, we're still doing okay here on the real estate side. I think people will start moving more into the real estate. And I think, I don't know. I think that they're going to drop rates. I think they did a little bit already to prop it up. So I don't know, especially going into the election season. I think it's going to be a little bit crazy on the buy side for people, because it's going to drop a little bit and start to stimulate that side. Because I mean, during COVID, it did the same thing, right? They dropped the rates and everything it literally held up everything. So I think they might try and do the same thing, but I don't know how long we can do stuff like that before something gives on the real estate side.
That's where I'm at, bro. I just don't know. How much longer can you just artificially stimulate an economy? It has to stop eventually. I think Jerome Powell is going to make the right decision. He's not going to make any cuts, and it's going to be a super hard fucking landing, and it's going to be a bloodbath for a minute. And it'll only be like 6 months, but it's going to be a really, really brutal 6 months.
I'm not opposed to that.
What are you thinking, Dino?
Yeah, man, I got a lot of thoughts in my head. So I feel like we should unpack this. One thing is true. The stock market is emotionally driven, but at some point there is some real hard facts in there that make some ripples and some lasting trends or cycles. I think, the Warren Buffett news is what everybody's talking about right now on the headlines. Him being in a strong, heavy cash position, selling off a lot of Apple, selling off a bunch of other stock I haven't researched enough about. But I would say that in itself is is a reflection of when there's big players, there's big news articles, there's big emotionally heavy driven things. There's a trend going on. It's going to sway that market. And one thing that we've talked about many times before, and I think all of us three and the people listening are aware of, is we've been on an upward trend, right? Real estate, like all industries and economy, like industrial economies, have cycles, and real estate has its cycles. And historically, it's 10 to 12 years that it has a cycle where it's on an upward trend, and then it goes down, and then it comes back up. So when you think about it from an economic standpoint, macroeconomic standpoint, you can't help but think that at some point it's due, right? At some point, a correction is due. It doesn't mean there has to be blood in the streets, but there has to be a correction. Argument sake is that there has been some that we've seen, but I think they've been more pullbacks than they have been actual corrections from a macro standpoint. And I think all of the data, right? Anytime the headlines are saying there's a crash coming, there's enough people around me that I know, like, and trust. They give data points that say the inventory's low. There's, and I'm going to throw out a percentage that's going to be incorrect, but 60%, 70%, some really high percentage, greater than 50% of America is locked in at interest rates that are sub 4%. Yeah. And they're not trying to go find a new house and have a new interest rate that's 50% more than that, 100% more than that. So I think there's a lot of real hard fact data that is going to say that it's not. But if everybody loses their job and the economy is crashing, bad things happen and things break. And most of America has no money in savings. So despite the fact that they love their house, they're locked in at low interest rates, if things break and they lose their job, bad things are going to happen. And there will be a lot of challenges for a lot of people financially. So I could see that forcing inventory. I think that if that inventory is now available, I think that the economy having challenges, what we just saw them do before, lower the interest rates, could be the play if they want to stimulate it. But I can't help but feel inside that there's people that want to see blood in the streets, and they want to leave the interest rates where they are, and they don't want to stimulate and support the economy and let the pain happen. So it's really hard to know what's going to happen. There's so many conflicting arguments about this topic, but I can't help but see all the red in the stock market and some of the headlines to have a little concern about there being some painful times. What I can say with confidence is I can't be happier than the way our business model is set up, because I can ride the waves with wholesaling. I can choose those best deals, right? That's all the flips we have going on right now. We have a dozen plus. They're all the best deals that were on the table and available and have tons of cushion. The wholesale deals that we have, I'm in and out of those. So I'm not having to hold a ton of inventory. So regardless of what the market does, I'm happy with where we're at and how we're positioned. And I guess I want to ask a question after that, after my thoughts. Do you guys, not that you want to see pain on other people, but do you guys want to see a market crash? Would it be good for the economy in some way?
I think it'll be good to reset things and kind of bring everything back down. Because if you think about it, we all know who Sam Zell is. Bro, before COVID hit, Sam Zell called top and sold off a fat chunk of his portfolio before he died. Think about that. In 2019, Sam Zell was like, this has to stop. This is chaos. I'm done. I'm selling everything. I'm never going to get this much money for my portfolio ever again. And he sold. And he's the greatest real estate investor of all time. And then we go on another 4-year run because of COVID and the stimulation. I think that there's nothing, no matter how many people lose their jobs due to lack of just affordable housing and housing in general, you will never see the market actually crash. I think it'll stagnate, but I don't ever see property values going down for the foreseeable future, because they can't build enough. if there's like some random black swan event that comes into my light that I don't know, but just like thinking off the top of my head, what would cause a market crash? There's nothing legitimately that could cause like the housing market to crash. Yeah, there's a stock market and everything else, but there's no inventory. And then even if all these people who lose their jobs decide to sell their home, there's still no inventory. And so your prices are still going to stay pretty solid. If they dip a little bit, maybe. But if anything, it's just going to sit on the market longer. I just don't see any forces that would cause an actual market crash. Maybe just a stagnation and stop the fucking uphill run that's been going on for the last, at this point, it's almost been, 15 years? That's been like running up.
Yeah, almost 15 years. It's been 14 years.
What about you, Tommy?
Yeah, I mean, the thought that comes in my head, I mean, I could see small time landlords that own, I don't know, 20, 30, 40, 50 units that aren't sitting on a lot of cash. If their tenants stop paying rent, if they lose their jobs, I mean, I think those could possibly start to get liquidated. And then the people that have bought heavy in the last couple of years at high interest rates, I mean, and if it sinks down a little bit and they leveraged at 75, 80%, you could find those people in some really bad situations too, you know? So I think those people are the most susceptible, especially if you don't have an active income stream. So if you're not wholesaling, flipping, or have a good job, and you have all these assets that you don't really have that much equity in or cash flow, I think those people are the most susceptible to, if things do change a little bit, they could lose their shirt pretty fast.
Do you see any way of a market crash? Here.
Quick comment as we had a pause. Sorry about that. Dean, have you tried getting into the SoCal market? Guys like Scott are getting six-figure deals on the regular. I think I remember correctly, he was doing around 10 million. LG, if you send me a DM on Instagram, Dean Rogers Real Estate, then I will be happy to chat with you more and get your feedback on it.
Scott Oots does make rips, though. I do know that Scott Oots makes huge rips down there.
That's what I've heard.
Tommy, do you see anything that would cause a housing crash?
No, I mean, not things that you guys have already said already. You know, I mean, the inventory is low. They can't build enough houses, especially, I mean, the Midwest here in Columbus. I mean, there's a shitload of tech. I mean, I could see tech cutting back. I mean, I think Intel just cut 15,000 jobs, they said. And that's why a lot of people say the Columbus market is booming because Intel is bringing all these chips. Those can go away really fast. So you got to just go back to basic economic principles rather than these massive companies bringing a bunch of money and stimulus and jobs. There's just still not enough houses. So I think that really just sets the perfect picture.
I'm curious about your guys' opinion on, let's say, the stock market issue, right? Let's say that continues to be an issue. And we've talked about the commercial real estate landscape and a lot of debt coming due, the cost of debt being substantially higher when that debt was originated and those deals were originated, 3-4 years ago. Do you think stock market, commercial real estate, how does that play into where we mostly live, single family real estate? How does that affect that? Does that trickle down and cause issues? Does it stimulate because those people have to get into some other asset class? Do we think that Wall Street comes in and snatches up all those commercial deals that have gone south and it doesn't really become an issue? It just comes another great deal for Wall Street. What do you guys think?
I mean, that's a good point. They've been sitting on the sidelines for what now? When's the last time a hedge fund brought from you? 2 years, 3 years? I mean, it's been a long time. Yeah. They're sitting on the sidelines for a reason. They're like across the board, across the country, have not injected into any market that I know of, unless they're sending offers at 60% of LTV, and nobody's taking that. So I think that's got to be their play, because like you said, the debt is coming due. I mean, they're on those 3, 5, 7 year arms. The interest rates double, triple of what they were buying it at. So I think a lot of these people are either trying to sub to those things and get another sucker to buy them or something before they lose those deals. But I think that's got to be what they're waiting for.
I don't think so. What I think happens if the stock market stops giving good returns and then the commercial stuff stops giving good returns, it'll either drive up our prices because the returns are going to be found somewhere, right? Like the people are going to find, how am I going to make my money and keep my money safe? Or it's going to completely crash. And then the single family market's not going to be nearly as competitive because they know they can get better returns and a better asset class like multifamily. And there is blood on the streets. And so they're going to keep going over there. So I know that's not a very good answer. And it's very like, it could be this or this. And there's only two things. But I see that is what could happen. I think office space is toast. I really do. I think office space isn't really going to come back at all. Dean's talking about making $1 million a month from his fucking house eating chili dogs, bro. You know, like they're a multi-million-dollar company. No one works in an office, right? So I don't see like I see the office space really taking haircuts. And that's for other reasons besides the debt. I see in multifamily, the debt is what's going to really, really send it. But institutional people don't want to come buy the 20-unit multifamily. Like we still haven't seen those like institutional people buy those because it just doesn't fit. And so I do think that is if you want to make crazy good money over the next couple of years, I don't think it'll be necessarily in like single family. If you want to get like great returns, you're buying the multifamily stuff. I'd even say office space. That is where you're just going to get crazy, crazy good returns over the next couple of years because it has to rebound eventually. And if you're buying it right, you know you're not going to lose your ass. That's what's going to set you up and have like those life-changing deals.
Sam Prim on IG says Tommy can beat up Dean and Stratton.
Wow.
He's stirring the pot over here. Little troublemaker.
What up, Sam?
What's going on, bro?
We're buying or at least we're in contract right now on a 32-unit office building right now in Columbus. It's an A-class office. They bought it for $1.75 in 21. It's producing $23,000 of income right now. As is 10 to 15
years or a month?
A month, 23,000 a month. And it is, the tenants have been there for 10 to 15 years each, pretty much. It has 3 vacancies and it was basically some doctor, his wife wanted a side thing and they've mismanaged it. So most of the people are doctors, medical specialists. So I'm really excited about that deal. We're getting it for 1.67.
Bro, you're getting that thing at like a 12 cap.
That's a great deal.
Great deal. And we're gonna move our office in there, and we've got such a good network too that when people move out or they don't like our lease terms, we're gonna try and triple net some of the stuff and up and really push the income. We're gonna self-manage it and try to get some of our real estate people in there as well. Maybe some, and I think it's gonna be a killer deal.
I like the medical space. I feel like those tenants, bro, those tenants are never leaving.
Yep.
Like, you know, they have the money, you know, that they build the hell out of the insurance companies. If it's office medical, I don't see a downside, in my opinion.
That was the reason why the bank that we're going with likes it. At first, when I told them, they're like, no. And I was like, well, they're like, well, what kind of tenants? And it's mostly medicals. There's some dentists in there. There's a lot of like masseuses, specialized medicine that have been there for so long that they were like, okay, let's give it a stab.
What is it again? Have you gotten it appraised yet? I mean, I'm just looking at it, bro. At 8 cap, that thing's worth $2 million.
Appraisal is within the next 2 weeks.
That'll be huge. Congrats, bro. That'll be a big deal.
I like that.
What did the bank tell you when you wanted to buy it? Did they make you cross-collateralize anything for a bigger deal like that?
No, we're bringing in a sponsor, though. We're bringing in one of my private money lenders as a sponsor, just so we're not messing with it. Just to have insane cash on hand. Because, I mean, like I said, I'm 29. We have 10 employees. We've got a lot of things going on. So a lot of times our money's fluctuating in and out.
Yeah.
We had, I just called one of my guys that knows that's super liquid, super bankable. And I'm like, because I've been through this whole community banking thing for 3-4 years and getting told no and kicked in the dick so many times. I'm like, okay, I'm just bringing on a sponsor. I'm not even going to try and mess with it. I know this is a good deal. I'm going to give up 50% of the pie. Let's just get this thing done. And, 3 to 5 years, exit it on a refi or sale and make a bunch of money.
Yeah.
Hell yeah. When you talk to him, did you tell him if you refi it, is he going to stay in the deal or is he going to be out?
We'll have that like escalation clause within our operating agreement and our docs. So we're getting to that. Yeah.
That's dope though. And I think that's a lesson that everybody needs to know. Just give up the equity so you can get into it because eventually you'll be bankable.
Yep.
But right now, like you got to do these deals to be able to be the sponsor, you know, like you got to get into it, build the wealth, and then you'll be able to get those done.
Yeah. I mean, we own like I said, about 15 million in single family duplexes. We got a couple 8 units, a small commercial, but nothing big like that. And especially in an asset class like office, they're just like, do we want to see? They're gonna write us a loan at 70% LTV, which is actually pretty good for that space. But they just wanted to see some incredible bankability, just something to fall back on.
Yeah.
How much did they want? Did they want you to have like 2 million liquid, like the purchase price liquid, or what?
They're going to want like 25-30% in operating account on top of down payment. So 30%. So I mean, yeah, probably around about a million liquid before the down payment.
Yeah.
And then they want that, and then they check your bank account too, right? Because I've never done like a bigger commercial deal like that. Like they check it consistently to make sure it's in the operating account.
Yeah, they're gonna make sure that you hold it within your account, within a percentage.
That's bananas. Well, congrats, bro. That'll be a huge deal.
Thank you.
That's
All right,
sweet.
next one. How to set standards in your company. Tommy, will you go over this one?
Yeah. So I mean, like I said, I've got 10 in-house, in staff, in Ohio employees, team members. I think that's a big thing right there, is calling them team members, not employees. I think that works down. That's a big thing coming from the sports world. I think because it gets a negative connotation, but I mean, everything flows down from the top. So making sure that you're setting the tone. So you come in with the right energy. If you're having a bad day and you walk in the door and you got a frown and you're pissed at people, it's going to completely ruin the culture of your entire company. So making sure that everybody knows when you walk in the door, it leaves at the door and it's business time. I think that's a huge thing. One of the things that we do within our business is teach autonomy. So everybody that has their own role, we purposely leave the office a lot to try and make sure that they collaborate with each other and they have the say in the business to make decisions. So if my main acquisition guy who's been with us for 3 years, he has full go to pull the trigger on something for us to buy it within a certain realm, So making sure that you don't sink yourself in the business, micromanage everybody, because then you're just going to have a shitty job that you're overlooking everybody and everybody's going to start to hate you at the end of the day. So that's kind of our philosophy within our business.
What about you, Dino? Great answer, Tommy.
Yeah, great answer, man. I'd echo so much of that. I think, first and foremost, your role as the business owner is to be the leader, and you have to set the tone of what the brand of the company is, right? As I'm onboarding our new team member, and I love using the team member. If you go on my phone and you search each of my team members, it says, and I label everybody in my phone. If anyone's listening to this, if you want a cheat code in organization in your life, you label everybody in your phone. If they're a buyer, it has buyer and then their name. If it's a private money lender, PML, and then their name. If it's a team member, I put team and their name. So everyone in my phone is team and then their name. And you're the brand. You set the tone of what the brand of that company, right? First and foremost, I think you should have core values and really be passionate about those core values and describe as to what that means for the company and what that means for them. And naturally any team member you have needs to align with those core values. And the more that you can just continue to demonstrate day in and day out of what it looks and feels like to be the example of how others should be in the company, right? You gave a great example, Tommy, of just showing up with a positive attitude. Positive was one of our core values, and passion is as well. If you're passionately positive, right, you're going to be just exuding the best version of yourself, and you're going to be bringing that to the table when you're speaking with a homeowner and trying to buy their house. If you have a negative attitude, that's going to come across in your tone and the way you approach things, and you're not going to be probably as good of a problem solver, and just all of that trickles down. So it starts with you. And so how do you set the standard? You just got to be really clear on what your core values are, what it means to be a part of the team and to represent the company. And you have to demonstrate that. And you can't do that once. You can't talk about that once. Something that I had learned, and I can't remember who I learned it from, but we added it to our team meetings every Tuesday morning. And that's another thing. You need to have team meetings every single day on something else. It could be Mondays for us is acquisitions, and we're talking about the leads that are close to the finish line. On Tuesdays, it's our team meeting, and we start our meeting with what we're grateful for, and talking about, showing gratitude for, and it could be anything. I love to use the example because I've actually used this one of the days, probably more than once. Like, I love butterflies. I'm grateful for butterflies. They just make me so happy. Whenever I see one, I just can't help but be like, oh, look at that butterfly. That's freaking awesome. And it's something small. Like today, one of my acquisition guys said he was grateful for his barber. And he's had his barber for 42 years and he always cuts it right. And when someone was like, 42 years, is that your dad? Yeah, my barber is my dad. And it was just like, kind of a cute, heartwarming thing. And it put us all in a good mood. And, just being in the state of gratitude is really good. And then, we have our other meetings throughout the week, but if each day you can continue to demonstrate to your team what standards you have and how we hold each other accountable and stay at that level, then that's how the great companies continue to perform. And I know that's what's helped us to continue to push.
Yeah. Some of the things you said there, sorry to cut you off, Strat, but I think it's super important as the boss or the leader. I mean, you have to inspire your team daily. So inspiring them in every way of their life, so I've had people that are a little rough around the edges. In a couple of years, they've completely changed the way they do everything, not only work ethic, written down here as you were saying that. So you have to have huge dreams and they have to fit within those dreams to be on your team. If they're not, if your dreams aren't big enough, they're going to leave because they don't see their life within your vision, so that's a big thing. So inspiring them daily, not only on like business, work ethic, but like, how do you talk about your wife when she's not there? How do you talk about your kids and your life when they're behind closed doors, right? And your self-talk to yourself. I think that's big. So I've had people come in there. I'm like, dude, you got to cut that shit out right now. Because if you're doing that, nobody's going to trust you. And just teaching people life lessons that they've maybe never had. So it's all of just rooted in leadership. And then investing in their goals. All of my team members, they know if they're with me for at least 6 months to a year, I'm going to help them buy that first flip. I'm going to help them buy rental properties, house hack, whatever it is. And I'll literally take a haircut on a deal to help my team do that and help them raise capital for it.
Heck yeah.
Hell yeah. What up? So I love you are the standard. I would say, like, number one overall, you are the standard of the company and you need to show up every day. I don't know if you guys follow Eric Brewer on Facebook. I'm an Eric Brewer fan. I've slowly just became a fan of Brewer because I think he's a fucking dog. Yeah. But every day he has a team workout at 6 a.m. Right? Nice. Like, I love that. Right? So, like, stuff like that. We're setting the tone. A big thing for me is permission to fail. And like, we're all in sports, and so we know what it's like to talk to people correctly, and we've seen people just get talked to fucking sideways. So a lot of people haven't come from an aspect of where this is how you talk to people, this is how you lead people, this is how you get the most out of everybody, right? Because so-and-so is not going to get treated the same as so-and-so, but they will be treated fairly, right? And so knowing how to talk to those people, and
that is
like, everyone's treated fairly. One of our core values is it's a sports team mentality. We are not a family. And I say this all the time. With our family, the child with Down syndrome is getting taken care of no matter what. On a sports team, if you're a GM and you draft a running back with Down syndrome, you're losing your fucking job. You spent a first-round draft pick on a kid with Down syndrome. You're losing your fucking job.
There could have been some different examples to make that point. That one was extreme.
It really sticks with you, right? Because in a family, we all care for our special needs family members. Like, we 100% like, this is my family. I'm going to do whatever it takes for this person. On a sports team, like, bro, that probably just isn't logical. We shouldn't make that decision. It's not the best for the collective. And I hammer that home. But I think core values is huge. Like, I just pulled up like our employee handbook. Having them and like making sure you care about it. So like, speed is king is one of them for us. What else we have? Care 360, strive for excellence, radical transparency, Super Bowl mentality, and integrity. I think you should come up with 3 to 6 of them that you truly care about, and you can just bake the way everyone should act inside of that. It makes the management and the leadership so much easier, and it gets everybody on the same page. Because I used to think core values were so fucking stupid. right? We all played sports, right? You walk out the tunnel, you hit the like Ubuntu thing or whatever in football, whatever the core value was like for the year on your high school football team. But they really do mean so much more because now everybody's acting in the same way and they think about it consistently. And then I would say same thing, Dean. I got that from Rafael Cortez, actually. The what is something you're grateful for and something good that happened to you. I got that from Cortez like 2 years into the business. So every single one of our meetings goes that way. Oh,
yeah.
Look at that face. Oh, man. Look at that
It's
face. Can you hear me? It's a great face.
What a
Hawk
great
tool.
face. Don't
What a
even
great
change
face.
it. You just
Let's see
love
if
that
it comes
Hawk Tua
back.
face. It just
Bro, I
keeps
just
showing
love
up.
that Hawk Tua face.
Just keeps
Oh,
showing
God,
up.
it's still there.
Oh, man, get rid of it, please.
Let me switch my camera real quick.
We got time
We're
for
back.
probably
We're
one more question.
All right, one more question. Last one. Let me see here. You want the pivot one or the buyer commission? I think the buyer commission is pretty interesting because I'm not a flipper and I really don't understand, let's say, the back end mechanics.
Let's kind of want to use the pivot one because I feel like the commission one is so good for next week.
Okay. All right. When to pivot your business? Let me look at this camera, the other camera. When should you pivot your business? And I guess it would be like, when do you stop? When do you pivot? And like, when do you just like flat out quit? Because one thing over time, I used to think like, yeah, like you get into business and like everything just works. Like you build the business and everything works to when every day is a pivot. Like every day there's a new problem that needs to be solved, a new skill that needs to be learned, something else that we need to push forward. And if you're growing your company, it'll never stop, right? Because if you get to like 10 million, 30 million is way different than 10 million. You got to be a different leader, different operations and all that other stuff. So when should you pivot your company versus when should you just cut the cord and do something else? Tommy.
You got me thinking. This one's a tough one, you know? I mean, I think a big thing is going to be taking emotion out of a lot of things and tracking KPIs. So if you're tracking KPIs over time and like, so let's say you have to pivot away from a team member that you love, but they're not doing the right thing. You have to pivot away from them as time goes on if they don't do the right thing. One thing we've done recently to pivot is we've been flipping houses and we've been very, very stubborn. Like we have to flip them all the way, but we've pivoted now to once we've learned over time that we could have either wholesaled it for the same amount or wholetailed it for the same amount. So really understanding your business model and being able to change it is important. So now, like when we're taking deals down, we're throwing them on the market for 2 weeks and seeing if we can get a number that we sell it for that, and then if not, we still flip it. So it's adding certain things when times go on. It's a good question. I mean, I think also being in the right rooms is really important. So hiring a mentor, making sure that you pay to be in the right rooms. Like me and Dean are in the family. I'm about to join Collective Genius. These people are smarter than me. If you break down your business to them and they're like, this is ridiculous, you need to do something different, you heed that advice because people have been there in those shoes. And if you tell them your goals are to be where they're at, that's why you're paying to be in those rooms, you know? So that's a forced pivot from just getting advice from people, I would say.
What about you, Dino? Thanks, Tommy.
So I've had a couple pivots in my business, and it doesn't necessarily mean going and doing something completely different. So I think it could be that this just isn't for you, right? And you need to go do something else, and you're destined to do something else. But I also believe that you can pivot within your own business and make necessary changes. I know in 2019 we pivoted away from only flipping houses to wholesaling first, flipping only the best deals, and starting to acquire and hold on to rentals. And that was by far the best pivot that we ever made in the business to date, because before it was just, I'm a flipper, I got to flip every house, this is what we do. There was nothing else to think about. I just wanted to flip more houses, more deals. And it just became just way too much pressure and way too much risk and exposure. And it didn't make sense when you look back at it, what we were doing. And so by taking the pressure of all the deals we were doing and all the cash in and out, like it was just a washing machine. I talk about that all the time. I was cash broke all the time. And it was not a good feeling. And I was in the grind hustle mode, and I realized that that was a season I was in. But then once I kind of matured to the circumstances and realized we needed to make a change, and we decided to, it was the best thing we could have done. So I think you really got to pay attention to, are you getting the results that you want? Right? It's going to take a while to get the results you want, regardless, because you've got the time to get your skills up and to see the momentum finally build and get the breakthroughs and hit the milestones. That's going to take time, but are you headed in the right direction? Are the best, brightest, and the people who are having the most success doing the same thing? Or are you trying to do it, the old way, so to speak? And so I'm a big fan of paying attention to what's working and what's not, and what kind of risk exposure you're putting yourself in. Because in the beginning, early stages, I mean, everything is pretty risky because, you just don't quite know what you're doing. And so you kind of just got to go for it and rip the Band-Aid off as smart and as safe as you can. But you got to kind of wise up and get smart around, doing better at all the different things you have to do as a business owner, whether it's marketing, whether it's analyzing deals and underwriting those and making the right decisions on deals, adding team members and the right team members, all these things start to get really important, and you got to get better as a business owner and a leader to start getting the results you want. And pivoting and changing what you're doing and some of the strategies is sometimes part of that.
I love it. I would say I probably think about quitting like once a week. Like people are like, man, I just feel like quitting. I feel like every entrepreneur feels like quitting once a week with the hard conversation, the hard phone call, the stupid problem. You're like, Jesus Christ, what am I doing? Like, and that is always going to be there. And I think it's a muscle to build up of just resilience, because you need to know, like, this is just not going to stop.
Yeah.
You are the one who the check stops with you. And so this feeling is never going to go away. The hardness is going to be there. And like I said earlier, as you grow, the hardness is just going to get worse and worse and worse. You're going to come up with new problems. You got to go learn something new. Oh, I got to be a better leader now. Oh my God, now I got to go raise a bunch of money. Oh, wow, I've never done a commercial deal before. How the hell do I figure this out? Hey, these banks won't give me any fucking money because I'm not bankable. Like, there's all these things that we've just named off today are just different problems where it makes you want to quit. But then you got to keep figuring it out. I would say if you are thinking about pivoting, the easiest way to do that is if we are constantly improving and we are tracking our numbers at the same time, right? Because if we're doing both of those, like these two both just said, Dean was like, hey, and Tommy was like, hey, so here's our numbers on our flips. Here's our numbers on our wholesales and our wholesales. We are constantly improving this process so we can make more money, make it faster. Well, guess what? We've tracked it. These wholesales are now making us 2 times more faster than rather if we flip the house. So as we have like the data points to go off of, now it's a lot easier. Even a consulting friend of mine, he was telling me like, hey, bro, I've been doing all this stuff. I was like, well, what are your metrics? If we have the metrics, we can know exactly what decision we should make or where the problem is. Our KPIs are the master. Even if you're just getting started and you're like, hey, cold calling isn't working. If you could bring to us your numbers and like, hey, here's the list I'm calling. Here's how many calls I'm making. Here's how many leads I have. Here's how many offers I made. We could point at one of those numbers and say, here's where you're off. Here's probably what you need to do. Here's what the data is telling me. Yeah. And so if you can track stuff from the very beginning and you need help and you're like, hey, I don't know. And you approach Dean, me or Tommy, and you're like, hey, Tommy, I've been cold calling for 6 months. Here's my daily numbers. I don't know what I'm doing. Why is it not working? And Tommy could just be like, well, you have 400 leads and you have 2 offers. So we're going to call back all these people and we're going to make them an offer, right? But that is what the data does for us and how it helps us pivot. And if the numbers are good, then you know what? We got to pivot off of cold calling. I'm going to go into direct mail. But it's never really a gut feeling until we have numbers.
Yeah, you said something important there. And to me, I mean, all 3 of us are sports guys, right? So I think sports just kind of callous you to go into the business world, especially if you're not the number one guy your entire life, which I'm assuming you guys weren't the entire time. So getting kicked in the dick and having injuries and all these things and having to work, knowing that you maybe are good enough to be on that field, but you just got to put in your time. So just know that it's going to go down. And Mark Evans said something a long time ago that stuck with me. Is he said, I'm in business for life. So that's the decisions I make. is
Yep.
I'm in business for life. So if you're the type of person that you want to be an entrepreneur, you just gotta get up when you're getting kicked in the dick. If it's not for you, go get a day job. But that's not for any of us on this call.
That's a great one, bro. I'm in business for life but what else am I gonna fucking do? I can't make money any other way. I can't go work for someone.
That's great.
Hell yeah, Tommy. What other parting words do you have for the people?
No, man. I think we talked about a lot of things that's helped me out in my life and especially in business. I mean, this stuff takes a long time. I mean, Dean's been doing this 11 years, and you're hearing him now do the $100,000 deals, right? And you go on his Instagram and you don't see those 11 years. You didn't see in the beginning the hardships. You didn't see the times where maybe somebody's spouse is the only one paying all the bills, So don't look on Instagram and think that that's the way that everything is, You got to put the time in, you got to take your lumps, and you just got to keep getting up every day and being consistent with it, and keep moving the needle, and it will change.
I love it.
100%.
Thank you so much for coming on, bro. Guys, don't forget to hit like and subscribe. We need to do this earlier. Don't forget to hit like, subscribe. Tommy, where can people find out more about you?
Hit me up on Instagram, Tommy Harr 05. Would love to help anybody out. Shoot me a DM. Let's chat. And I'm going to be out in California here, San Diego, September for CG. I want to come kick it with you guys, and I'll be at family as well, Dean. So we'll have to catch up.
I'll definitely see you
Dean,
soon.
did they let you into CG yet, or did you say you don't do enough deals?
That's not the problem, but no, we talked about it. They got some guy in there who's got old status of
Leon didn't get you in, bro.
He's still talking about it. He still reaches out to me and asks me about it. So
that's ridiculous. We'll shoot him a text.
Yeah.
Hey, Shanae. All right, guys. Thank you so much for tuning in. We'll talk to you next week.
Peace.